Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some data. And so here we are looking at the Rivian daily chart on Thursday, February 13th, just after the market has closed. And Rivian closed at a price of $13.30, being up over 6.5% on the day, but dipping by about a penny so far in the after hours. And so, yeah, I wanted to go over the chart because I had been thinking that Rivian would be breaking down, going a little bit lower. But after today's not only price action, but also some of the options data, I do think that Rivian has flipped bullish. So I do want to go over not only the chart here, but also some of the options data and a couple contracts that I have been looking at, and actually one that I did pick up today. And so, yeah, here looking at the chart before I throw up all of my drawings here, I did just want to go over these moving averages. The blue one, I don't know if you can see it because it's kind of a thin line, but that is the 200-day moving average. That is currently at $12.56, being below the current price. And it looks like today not only did we bounce from that level, actually getting above it, seeing that we were below it at the close on the 12th, as you can see right there, the top of that candle just below that blue line. We did open above the 200-day moving average, bounced from it, testing it nearly perfectly. It looks like the low for the day was $12.58, so just 2 pennies above that 200-day moving average. And then, of course, we did get above this peach line here, which is the 21-day moving average at $12.92. But now we do need to get above that 50-day, which is at $13.42. So just about 12 cents higher than where we closed at, with the high from today being at $13.33. So yeah, I mean, I think that this does look like it will continue, and that is going to be supported in some of the options data I'll go over in just a minute. But I did want to throw up some of my drawings here. Didn't want to start the video overwhelming you guys with the levels. But yeah, basically what I was looking for and why I thought Rivian would be breaking down is because of this Fibonacci retracement here. We do have the golden pocket, which was tested, the 65% level, the base of that golden pocket coming down from the 618. That is at $12 a share. And on February 3rd, we hit a low of $11.89, so piercing that level, and then we have started to move higher. Another reason why I think we're seeing a breakout now is because we have been putting in higher lows following, the test of that golden pocket, and actually testing the top of it, testing the 618 yesterday. On the 12th, we hit a low of $12.25, and that 618 is at $12.23. So just looks really nice there. But the reason why I thought it was going to be breaking lower is because of the 786 over here. That is at $11.03. Thought the stock might come down to right around 11. We also do have, this light blue downtrend based on, it looks like, these pivot highs going back to September of 2022, as well as the highs from December of 2023. Gotten multiple rejections from that level, continuing down. We did get rejected here before breaking out. And so I think that this looks good, that we have broken out. I was kind of expecting a retest, perhaps coming down to this red uptrend based on the lows from over here from April 2024, as well as the low from November 6th of 2024. So I was thinking we might be coming down to that, or maybe even this purple downtrend, but I think that anybody waiting for $11 a share now will probably be getting left behind. Of course, though, unless what we're seeing today is a fake out and we see a breakdown tomorrow, always a possibility, so good to prepare for that outcome or that possibility of an outcome. We also do have this yellow line that I've drawn here at 1296, just looking like there was some support over here. I was thinking that might be flipped to resistance, since it was resistance over here, getting a wick up to that level on November 13th before pulling back, finally breaking above it, acting as support again over here, but then consolidating below that level. Now we closed above. Let's see if we can get another close above 1296 or 13. I think that would be really good for the end of the week to be closing above 13. We'll also look over at max pain in just a minute to see where that is for tomorrow. But then also I do have this line here also being yellow. Maybe I want to draw that as being red. And because, I think that could be some resistance around 1550. It does look like it was kind of the tops of what might be viewed as, a head and shoulders pattern over here. But yeah, I mean, that's still over $2 above where we're at now, so plenty of room to run. And then with the highs over here, hit on January 3rd with this big candle here in the volume, when we went up almost 25%, 24.45% on January 3rd. So yeah, just looking really good here, especially just getting above these moving averages, getting above 13. And so, maybe we get a pullback tomorrow to 13. Hopefully we bounce from it and then continuing higher. And I should also note, this is potentially risky with earnings coming up on the 20th. I believe that's next Thursday, so a week from now. So good to be planning for that. If we do run a lot before earnings, maybe we see a correction, or if we do kind of consolidate around here, maybe we're just waiting for earnings to break out. Another thing, while I'm talking about the chart here before I switch over to the options data, is if we look at the MACD, following this big up move, we did flip green for a little bit, but then we did go back to being red as we did bleed down. Let's just get a measurement from the top there to... let's see what today's open was, or getting down here. That's a down move of 20 to about 30%. So a pretty nice retracement there, again, coming to that golden pocket there. And so now let's look over at some options data that looks really good in my view. It got my attention today, so that's the main reason why I wanted to go over Rivian. And so this is the net call and put premium for the day, along with the stock price in yellow. We also have the volume down here, which suggests that there's been a lot of buying of contracts. And if we look at the data for the day, we can see this red line. This is the net put premium, more or less stayed flat around zero for the day, and basically ended the day a little bit positive. Over here we can see the net put premium was up by $11.57 thousand. So that's a little bit bearish that the net put premium was up, but it's not that bearish considering, looking at the net call premium in green here. So we saw that being positive at the beginning of the day, pulling back a little bit before getting this massive move to the upside. And, going from net call premium before the move of around $627,000. But then with that move, that looks like it bumped up the net call premium to around $2.22 million. So this bump was, almost $1.5 million. Or actually, let's see. No, that was... more than $1.5 million going long on calls here. And then following that move, we just saw a fade higher that just continued throughout the day with some bumps along the way, but just looking really good. And so that net call premium ended the day over $3 million up, $3.11 million there. Maybe I should say $3.11 million. $3,110,000 up And if we do look over here at the bear bull slider, that is definitely more on the bullish side, up 56% on the bullish side. Then we got this little bit of neutral there. But overall, just looking at this data, it looks very, very bullish. And if we look at the past data from the past 7 days, let's just start there, we can see that there has been kind of this shift in, a call and put premium kind of floating around the zero, some days being negative, some days being positive, and vice versa, calls and puts. So nothing that really has stood out until today, where we get clear bullish moves with $3 million going long net on calls versus, effectively being flat for net put premium, less than $12,000. So that's really not that much. And then if we do look back over the past 30 days, we can actually see some, bigger spikes in the net call premium. And these were up, let's see, 6.5 million on, it looks like, January 3rd, 6.49 perhaps I should say, with the net put premium being down over $420,000 on that day. But if you look at the stock price following that, it came down. And so I think that this was perhaps just people getting a little too greedy on that move. It was not continued. And so, I think that we could view this as the net call premium forming kind of a wedge here with lower highs. And today we broke out of that, whether you want to think about that from here coming down to, the peaks here, or just from the highs over here when we went up by 1.4 million on January 24th, or over here going up, 1.2 million on January 16th. What we're seeing now is something that looks super, super good. So I'm really excited about that. Wanted to go over it with you, but I also wanted to go over a couple of contracts that I have been looking at. And so for me personally, I like to go well out into the future just because I'm still learning options contracts and trading them. Typically, I go for a 20% profit, but with these, I think that because I am timing, the buy when we're starting to get some bullish action rather than buying them back here and then having to wait a month, looking at, where there's a breakout, that's when you want to be going long. Not financial advice. I am learning, so take it with a grain of salt. But so here, this is one that I believe I've covered in my weekly options theses videos, which I'm no longer doing because I just want to focus on specific contracts that do look good. And so this is one of them, the $25 call that expires in January of 2026. So got 337 days before it expires. So plenty of cushion time in case I am wrong about this because, I am learning. And so this contract, I was considering getting it today, but I just didn't have, $100 on the side, or at least not that I wanted to be putting into a new contract. And so the average for today was $1.11. We could see that the low over here was sub $1, but the high was $1.15 with that average there. And what we can see if we do, actually, I'm going to lock this and scroll down. What we can see in this, there's just not that many contracts traded on it. But what we can see going back here on January 27th, we did see a volume of 1.33 thousand contracts traded. And with that, we saw an increase in the open interest going from 8,000 to around 9,000, going up by 1,036 contracts. And so that was, an increase. And if we do look, we see that the open interest is still above 9,000. So maybe not all of those were held, but it looks like the net is that contracts have increased that are held open over 9.5 thousand. So looking good there. But like I said, this is not one that I got because I just didn't want to be throwing $100 into this in case I'm wrong. And so, but before I get over to the other contract, why did I pick $25? And so that's going to be based on looking over at the chart here. Let's see. We do have this downtrending light blue line that I had talked about. Getting up to here, this green line, that would be around $19 a share. Or if we get up to around, this double top here, that is around $24.50 or right around $25 a share. So that's why I was eyeing this contract with plenty of time before that expires. As you know, I am fairly new to swinging contracts for profit. I used to swing them shorter dated and I'd get nervous. And so that's why I have, this further out into the future. So there are no emotions involved. And so with that being said, the other contract that I really just started to look at today is the $40 call that expires in January, again being 337 days from expiration. And so I did pick up one of these at 35 cents. So I'm risking $35 on this. And I was considering placing a limit sell order at 100% profit. So that'd be at 70 cents. Thinking that I had already placed one at a 20% profit, which is, what I normally do. But then I kind of realized, well, maybe this could be a runner. So, it's only $35 that I'm risking. Got basically a year before it expires, 11 months. So, I feel fine about that, just seeing what happens with it. And then if we do scroll down to look at some of the data, again on January 27th, we did see, or I should say maybe on the 24th, we did see an increase in volume of 7,229 contracts traded on that day. And we also saw, 5,000 a few days before, but that only led to an increase of 500 contracts, whereas on the 24th, the 7,229 contracts traded, that led to an increase in open interest of more than 6,000 contracts, going from 38.556 thousand contracts open to over 44,500. And then if we do look at the current open interest, it did go down from that increase by about 100, 200 contracts, somewhere around there. But we do see, much higher than 38,500 contracts there. We now have an open interest of 44,336. And with the volume today for the 13th of 302 contracts traded, I imagine that we will see this 44 go up to maybe 44.6 or so. So I think that this just looks really, really good. Looking at the bigger picture data over here, it looks really good. But I should say, why did I pick 40? That's an important note. And so if we look over at the chart here and actually look over at the options data, I was really just looking for a cheaper contract that expires in January of next year. And so the highest strike was, $40. And so I thought I'd look over at the chart. Does 40 make sense as a level? And then, so this light blue downtrend that has acted as notable resistance going back to the highs of, 2022, I believe. My cursor is not working here. So let's see if I can get that to come back. But that was September of 2022, just looking at the dates down here. And so that level is, right around 40. Super annoying that this is not working. Well, let's see. I'm just going to minimize this, see if that, it's not working. But the high over here was right around $40. Maybe I have to move a level there so we can see, right around $40. Sorry about the clunkiness there, but sometimes Webull is a piece of junk. So the high over here We can see it actually, $40.86. I do happen to have that marked there. And so, yeah, that's why I picked the strike of 40, because why not? I got 11 months, and I think that contract could go from 35 cents to 70 cents or $35 to $70, no problem, potentially going even higher. So yeah, I mean, I was waiting for this to break down to 1103, and maybe it does after earnings. Risky. Earnings are definitely risky, but with the MACD flipping green here, and it looks like we, bounce from the 200-day moving average. Looks like we're breaking out. I think that this could be moving, and that is supported by the data over here that we saw on the day, with net call premium going up by more than $3.11 million. So I am feeling really good about Rivian, and I hope you are too. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot, and take care, you guys.